Good morning, Paul Georgie from Allendale. It's September 14th, Wednesday morning, and we had quite a bit of volatility overnight in the grains, with the corn market having a 10-cent range and a 20-cent range in the soybeans, with most of that energy coming from follow-through, negative attitude selling from large players in the market is what we've seen kind of follow through from yesterday. As our floor comments were saying, we had a guy tell us that there was 13,000 corn sold in a 2-minute period. So with that kind of size of orders in any market, it's going to cause some movement, some volatility. We've seen that yesterday. That took out the chart points and support points and caused further selling. And we expect that today we're going to be looking at the charts as kind of key directional indicators. Corn market, for instance, in the Dees contract has got support around the 716 area, the lows overnight, and then again at 708, and then down to the 690 area before we run into some further support. Soybean, looking at the charts, we've got technical support around 1375 is the key area there. Some of the other news that we've got to talk about this morning from a fundamental perspective is the frost. Potential cold moving across the upper Midwest here tonight, Wednesday night, Thursday morning is supposedly the best chance of any frost in the Minnesota, northern Iowa area, and then it moves off to the east. This morning, cold temperatures were minimal, mostly staying up into that central Canada area. We also had NOPA crush numbers this morning at 118.767. That was almost 4 million bushel less than was processed last month. So, and we would expect a smaller number here as we move into the fall and start into harvest, supplies wind down and so forth. So not a complete surprise there, but certainly showing some reduction in demand as well. Talking to a producer this morning in north central Missouri, harvest is starting there. He harvested one field of corn, 189 bushel an acre. He's telling me that's the best corn that he's ever had raised on his on that field anyway. So starting to get more and more harvest numbers. The surprise is probably to the upside in many fields in many areas. However, we still have that central Illinois and over toward Indianapolis area that were hammered hard with the drought and still haven't seen much rain. Those areas are coming in with much less yields, and the surprise is still on the lower side there rather than the upside. So when you look at the whole picture in the grain markets today, I think we've moved away from the fundamental fuel for this market and the supply-demand issue here for a few days. We're more concerned about the trader sentiment, the confidence in large traders, fund managers, CTAs, in their confidence in believing that we can continue in an uptrend. And as long as we can hold these support lines technically, I think we can maintain that psychological support. But if we start breaking some support on the charts, that turns into a snowball here on the downside, and something that we have to watch for as we move forward here over the next several days. The macroeconomic situation is still a concern and still messing with trader confidence, as the Greek situation is certainly not over. We've also got the jobs bill and unemployment here in the U.S. that Congress has to deal with here in the short term. And that's going to be monitored very closely. And also, it's on the mind of the investor to to determine if they want to be in a risk position in commodities or in a risk-off position like we've seen yesterday. In the livestock trade, markets there are firm. Cutout values up $2.30 in choice. Select up $1.02. Pork product is stronger. The spreads there in the hogs have been very active, where the pressure is coming in the nearby hogs and support in the deferred contracts. That is due to the idea that we've got a bigger supply right now, and corn prices have deterred the production for those deferred contracts. So a lot of things happening here, but and a lot of traders on edge. So stay tuned to Allendale's research, or give us a call. We'd be happy to help you out, answer any questions that you might have. You can reach us at 800-262-7538. We wish you a very successful trading day, and I'll talk to you tomorrow morning. Thank you.